Look at this, pure price action, a scalping with no indicators, no complicated tools. In hypothetical backtest, gold showed about 65% win rate, S&P 500 around 60%, Tesla 68%, and Bitcoin 72%. But here's the thing, even the best setups will fail if you don't understand the trend. The market only moves in three ways, up, down, or sideways. They are called an uptrend, a downtrend, and a range. So let's start with uptrends. Price doesn't move in a straight lines. It goes up, pauses, then goes up again. Each peak is higher than the last, and each small dip stays above the previous one. Buyers are in control. Now here's where it gets visual. Look at these lines I'm drawing on the chart. See the staircase pattern? Each step up is an impulse, and each small step back is a correction. On the real chart example here, notice how price moves up, pulls back slightly, then continues higher. That's the rhythm you're watching for an uptrend. Downtrends are the same idea but flip. Price drops, bounces a little, then drops again. Each low is lower than the previous one, and the small bounce doesn't reach previous highs. So that means sellers are in control. Big drops are impulse waves and little upward moves are corrections. On the chart you can see it clearly. Price slides down, pauses for a moment, then continues down. Watch the lower highs and lower lows. That's the pulse of a downtrend. Recognizing this make it easier to time your entries without chasing the market. Let's talk about ranges. Ranges are simpler. Price bounces between two levels, going up and down like a ball between walls. Highs and lows repeat and there's no clear trend. Support is the bottom line and resistance is the top. On the chart you can see the price hitting the ceiling, bouncing down to the floor, and then bounces back up. And here's a quick trick. Look at the last two swings. If the last swing is higher than the one before and the pullback doesn't go below the previous low, that's an uptrend. And if the last swing is lower than the previous one and the pullback doesn't go above the previous high, that's a downtrend. If swings repeat the same levels, you're in a range. Simple. Now the setup. This is a scalping strategy built especially for 1 minute and 5 minute charts. First, identify the market structure just like we learned earlier. Here, the trend is up. You can see higher highs and higher lows forming on the chart. So now the setup itself. It's a simple 3-step system. Imagine we have a resistance level sitting at the higher high. Step 1. The breakout. When price breaks above the higher high, that's your first clue, but don't jump in yet. Step 2. The retest. After the breakout, we wait for the price to pull back and retest the same higher high level. This shows the market is respecting the new zone. Step 3. Confirmation. We wait for a rejection candle, one that closes strong in the direction of the breakout. The close of that candle becomes our trigger to enter a buy trade. Let's see it in action in a real chart. Here, the market is making higher highs and higher lows. We mark the most recent higher high, that's our resistance. Price breaks above it, that's the step 1. And then price retests back to that same zone, step 2. And right here, a clean rejection candle forms, step 3. We enter a buy at the close of that candle and then set the stop loss slightly below the candle's low or below the recent swing low and target the previous resistance or a 1-to-2 or even 1-to-3 risk to reward ratio. Now let's flip it for a sell setup. Same logic, just reversed. This time the market is in a downtrend, forming lower highs and lower lows. We mark the most recent lower low as a support. When price breaks below the level, that's our first sign. Then we wait for the retest. When price comes back to the same zone, we'll look for a rejection candle. Once it forms and closes, that's our trigger to enter a sell trade. Let's look at it on the chart. You can see price forming lower highs and lower lows. Then a clean breakout happens below the last swing low. After that, price pulls back and touches the same zone again. Now a rejection candle forms. We enter the sell at its close, with a stop loss just above the high and our target down toward the next major level or 1 to 2 or 1 to 3 risk to reward ratio. But here's the thing, you can't only focus on trends. Most of the time the market moves sideways, bouncing between support and resistance. Learning to read these range-bound markets is important because that's when neither buyers nor sellers are in full control. This is also where big players often position for the next move. In a sideways market, price keeps hitting about the same highs and lows. Sometimes it pokes above resistance or drops below support for a moment. That's the market shaking out traders and hitting stop losses. That's why we do not enter on those breakouts immediately. We wait for a retracement and a rejection candle to confirm the move. Let's look at it on the chart. Here's a clear ranging market. Price breaks above the zone, but notice there's no clean retest, no rejection, no candle. So we skip it. Later, price breaks below the range. Then it pulls back up, retests the same zone, and forms a clean rejection candle. That's our setup. Enter the sell trade at the candle close, stop loss just above it, and take profit near the previous range or 1 to 2 or 1 to 3 risk to reward ratio. Now here's a little trick for beginners who struggle to identify the trend easily. You can use two moving averages, for example a 200 period simple moving average and a 100 period exponential moving average. If price is above both lines, you look for buy setups. That means the trend is up. If price action is below them, the trend is down, so focus on sell setups. It's not required, but it can help you stay on the right side of the market until you get comfortable reading a structure. And that's it, a simple, clear scalping approach, but entirely on reading price and momentum. No indicators, no signals, just understanding how the market moves. If this helped you, hit like, subscribe, and turn on notifications so you don't miss the next one. Trade smart, stay patient, and I'll see you in the next video. Happy trading!